Hey, a very good afternoon to you. Warm day today across the UK. Hope you're enjoying yourselves. Netflix is what has caught my eye today, NFLX. It's down about 15-16% on earnings. Now, the reason for that, according to the analysts, is that they basically haven't grown as much as expected. I think they're expecting about 2.5 million subscribers gain into the quarter, and they got something like 1.6, 1.7 or something like that. So a little bit less than they expected, which has caused the 16% or so drop. However, they had a bit of a price increase over the quarter, about £1 or $2 or something like that. And that was all put out in the media and hyped up. And so that is really what people are putting it down to. The slight price increase, people becoming a little bit less likely to sign up because the media is putting a negative slant on it. However, the fact of the matter is they're a growing company. As the internet speeds are getting quicker, they're getting more content on there. It's a new way of consuming media, and I think it's a popular way of consuming media. So anyway, put all that to one side. Our thoughts on what the company's like doesn't really affect our trading decisions, but sometimes you have a bit of background of what's going on. Great story stock. It overshot itself, to be honest, when we got up to 130. It was very, very carried away. Now we've retraced and we're just hovering in this sort of 80 to or 85 to $100 range. For the past few months, we haven't really got any legs either way, and we're just right at the bottom of this range now. This is today's candle, obviously, and you can see we're right at the bottom in this 85 area, right on this support level. Now, what's interesting to me is if you throw up onto here a 100 period moving average, which we don't use moving averages to base our trade decisions on as such, unless it's statistical significant back-tested strategy. However, sometimes we can frame the trade a little bit and we can look at it and say, other people are looking at this, swing traders are looking at this, funds are looking at this. If they believe that this story is going to carry on and they're going to pull the subscribers back up in the next quarter, we could be well above 100 again. Or even if we don't, the fact just the natural trading range, we could be ping-ponging back between 100 and 85. So I've got a 100 period moving average here, and actually Netflix has respected that quite a lot. You can see here we pull back to that, and then as we pushed further on, we had a cluster around it. We had this horrible dip through, and that was at the beginning of the year when everything was getting slaughtered. Good bounce back up, but you can generally see of how we've traded it. So what I've done is, and again I'm not a particular huge fan of indicators for confirming your thesis, but let's have a look. If you stick a 100 period Bollinger Band over this, you can see how often we've tagged the upper and lower bands and we've bounced off it. In fact, since the story really took off, we've only tagged the Bollinger Band once before on that January sell-off. We nearly got to it last month, but now we're testing it again. So okay, what am I thinking? Well, I'm thinking this could be a potential buying opportunity. Now you've got to be cautious. Let's have a look at a 15-minute chart and see what's happened today. Okay, we've gapped down. Now let's look at a 5-minute. Actually, that gives us a better view, and if we zoom in we can see the action. Okay, so bearing in mind now it's 5:45 when I'm doing this, so we've got the whole afternoon of trade to go on this, but we can basically say that we have a range here between $86 and let's do another one down here at 84.80, right? That's the sort of range that we're looking at. Now, I want to see a breakout of that range. Now, obviously, if we break to the downside, I'm not going to get involved in it. Let it run. If it wants to do 2 or 3 days down move, that's fine. Another trade will probably set up after that, a different type of trade. However, if we start to close above the highs, or at least above this 86 level, even if we, perfect if we close above the first opening sort of 30 minutes high, but if we close above the 86 level, then that becomes a nice trade that you can quantify the risk on. Taking a long above 86 and with a stop below that range today, 84.60. It's not a big stop, $1.50, something like that, 150 cents. Not a huge amount of money, but then if you look about the potential reward you've got, if people buy this and we start to get a 2 or 3 day move and look to take some off at about 90, and then we could even run on back up to 100 at some point, and obviously having a stop below there makes sense in terms of managing the risk. So Netflix is what I'm looking at. Let's see where it closes today. That's worth watching. It's on the radar, it's moving, it's volatile, it's going to be a good trading vehicle. Take care.